you guys can be able to see what's going on, see what we're doing, and all that jazz. Okay. I'll put a video on how to fix sound on membership. Thank you, Omar. Can you please hit the buy button, please? I would like to see what it looks like. Okay, I could open up a paper trading account in a second, and we can do that. Okay, but let's go over a trade recap today. How did I make $1,600, right? Well, obviously, what you guys are curious about, what does Will trade? You know me, I trade NASDAQ futures. All I trade day trading wise is the NASDAQ futures. That's it. That's always what I'm going to trade. It's always why I'm going to trade it. I love it. Okay. Quick why I like futures. Make a very, very quick, simple sketch of why I like it. It's better than options because there's no spreads. There's a ton of liquidity in there. Okay. There's no time decay. There's no IV. There's no Greeks. You don't have to figure out what you're trading every single day. You could trade the same thing over and over again. It's technically cheaper than trading options too. There's no PDT rule and all that stuff. Okay. That's the fast reason why I think futures day trading is better. My long-term stock just hit. Nice job, though. Nice job, Marcio. Okay. So this is the 1 day time frame. Okay. Well, obviously I know that we have some type of resistance right here. Cool. We got that. There's resistance. If you guys don't know what resistance and support is, I'll make a video about it, and it's in my tutorials. Okay. Pretty much what it means is when we enter a certain level, price goes, sellers step in and push the price down. Support, when we enter a certain level, price goes higher and buyers step in. Cool. Why is there a level of support here? How did we know that buyers would step up here? Well, if you actually go to previous data all the way over here, right, you can see that this is acting as support. Wick touches, this was resistance. Now we're acting as support. You guys have to have an eye for this stuff. You guys have to practice this stuff. Okay, we broke again because look, this was previous resistance. We broke. Now we're acting as support. When support or resistance breaks, guys, I will repeat myself 1 trillion times in future lessons. But when support or resistance breaks, they flip on each other. So for instance, this was previous resistance. Price comes up, falls all the way back down. Now, since we broke that previous resistance, which I just explained to you guys what resistance was, we turn now into support. Okay? So that's why, and that's how I knew on a bigger time frame. That's why when everybody asks me, Will, what time frame do you use? Will, do you use the 1 minute? Do you use the 5 minutes? Do you use the 15 minute? I use all the time frames. When I'm actively in a position, when I'm like in a position, like my money is in the market, I'm in between a 1 to 5 minute time frame. I'm usually leaning towards that 1 minute though. Okay. So, and you guys can throw questions, comments in the chat while I'm going over this stuff. Okay. Awesome. So that's how we knew the support. Let's go to a smaller time frame now. Next thing, let's go to a 4 hour. This is literally what I do. 4 hour time frame. Next, we have valid level of support here. And you guys can see in literally since the 7th of November, which was, we're in the 13th, so 13, 14, 15. Yeah, 3 days, for 3 days straight, technically, we're trading sideways for 3 days. And that's why if you guys were on live with me, the live trading the last 3 days, today, yesterday, and the day before that, very, very wicky. We don't have nice big pushes. We don't have nice big runs right now. We're literally just trading sideways. So that's why I'm very, very conservative with my entries and my exits. Welcome, guys. Welcome, welcome. Okay? So I understand there's support here. I understand there's resistance here. We do have another level of resistance right here as well. You can see price is now getting between these levels. Now price is actually about to touch this level, right? Most likely we can fall back down, or if we break this level right here, we probably can go to the next resistance, right? So let's go to the next time frame, 1 hour. Awesome. See how it's kind of looking it's looking really easy. It's looking really nice, looking clean, okay? Now we have obviously main level of support. If we decide to break this tomorrow or the next day, this will be a beautiful trade to the downside. Beautiful, okay? If we break above here, right, we have room all the way technically up to right here. Then you're going to say, Will, well, isn't resistance right here? Yes, there's multiple levels of resistance, multiple levels of support. Well, then you can say, well, Will, why draw one right here? Well, if you guys zoom in, this is a level of resistance right here, okay? You can see every time when price comes up to this level, we get rejected. Price comes up to this level, we get rejected. And then what is this? This is a liquidity sweep. With the hedge funds, we don't want to trade like the retail traders. We don't want to trade like the average Joe. We want to trade where big money is trading. We want to be on the side where the big hedge funds, the big billionaire companies are. We don't want to go against them. We want to trade with them. Because if some hedge fund puts in $5 billion in the market, they're pretty sure that $5 billion they're going to make money off of, compared to our little few $100 positions or whatever it may be. Okay? So we know that there's no reason to go long here. We have solid level resistance. And if I go to a 1 minute time frame, you'll see, or a 5 minute time frame, you'll see what happens. Look what happens. We get into this, we fall all the way back down. Now, look, volume, guys, is so dry. If I open up my volume indicator, just type in volume on the indicator on the NASDAQ, on the trading view, right? We can see, let me go to a bigger picture. Let's go to the 15 minute. Look how dry. Yeah, we have a lot of volume stretch up here, but we're literally super dry compared to this, compared to these moves, compared to this. We want this. We're just doing this right now. Okay, every single day is not going to be an opportunity, but every single day can be an opportunity to make money. You just have to know how to do it, okay? So let me go back, right? We got resistance right here, okay? We got resistance right here. We got even another level of resistance right here. See? Because price comes up here, pushes on up. And then that's why it's super confusing. That's why you guys have to have super tight risk management when you guys enter this stuff. Just because, oh, I'm going to get in here. Look at this wick, right? Look at this wick. We came all the way down to this level, and then buyers bought this all the way up. We're in choppy territory, okay? We're in very, very choppy territory. And this is why people that don't have risk management and that over leverage their positions will blow their accounts. These moves right here. Okay. Awesome. Let's move on. Now let's go to the 15-minute time frame. You can see, right? Previous resistance. Look what's happening. We're getting to resistance. Previous support. When you start to day trade, do you just monitor one stock to day trade that day, or when you're experienced, do you begin to look at multiple? No, I actually only day trade one thing every day, all the time. The NASDAQ futures index. That's all I trade. I'm not like an options trader where we look at 15 different things. Because, guys, the more you're looking at, the less you see. And that's kind of a cheesy thing to say, but it's true, right? Imagine you're looking at 10 stocks to trade with. Are you going to be focused on all 10 stocks at the same exact time about all the same levels? Probably not, right? It's impossible. You can't text and drive. Well, technically you can, but are you 100% texting or are you 100% driving? Neither, right? Focus on one thing. Why? It's so easy. Like, I just wake up, boom, I know what I'm trading. I don't need to look at 1,000 different things. I know that this is what I'm trading every single morning. Okay? So that's my answer to that one. Good question. All right? So now I see that there's resistance up here. Okay? Most likely, do you want to go long right here? No, I do not. Most likely, we're going to fall back down. If we break through this, I went over the hedge and fund liquidity grab on the AZ. It just made it more clear to me how to see it. Yeah. Thank you, bro. Exactly. This guy, he took the course. Beautiful. I like it. What site or app you trade on? I trade on TradingView and Tradevate. Okay. Cool. Now let's go into my actual position. What I did this morning. Let's find 8:30. Yeah. Okay. Here's 8:30. Let me go to a 2-minute time frame. We got our support. And if you guys really look at it, I literally have my recorded trade in my recorded trade section, so definitely take a look at that. But I even told the team, we're in an overall bearish market. If we're pulling on back, we're making lower lows, lower highs, lower lows, lower highs. We're super choppy. I hate this type of movement. I hate it. But you guys saw me. I played moves on the downside, and then we caught a huge one right here. Okay, and this was the last trade I made. It was right here. We broke through support and went to the next support, and we came right back up. So I'm only trading in between these channels. And then you can see trend breaks here, and look what happens, right? Now, let me draw a better line than that. We're in an uptrend, okay? Now, since I know we're in an uptrend, I can say, when do I want to buy on the upside? When do I want to go long? Right? Well, do I want to go long right here? No, because there's a solid level of resistance. I want this to get closer, and I want this to have a ton of price action. That's why I only trade between 8:30 and 10. volume starts dying off, price action starts getting slower, there's no movement. Okay? I'm drawing these out for you as we speak. And then I have my two indicators, all I use, right? I use the EMA and the SMA. What is the EMA? What is the SMA? The EMA, exponential moving average, is this blue line. The simple moving average, SMA, is this green line. I have it on 200-day moving average, which means for a 200-day period, this line is going to do the average of what the price is doing. This is a tighter moving average, right? So this is going to be on a 9 moving day length. It follows the overall trend a lot tighter than this one, okay? So if we're looking at a bigger time frame, overall, if we are trading above the 200-day moving average, most likely buyers are stronger in a bigger picture. If we're trading below the 200-day moving average, sellers are a lot stronger, okay? When I capitalize on the move to the downside, okay, we are trading below the 200-day moving average, okay? Let's go. Let's keep going. Now I can see we have another trend, right? Right here. If we can hold above this and we have strong buying pressure, this position on longs will look very, very enticing. I might want to go here, right? But if we break below this, most likely we're going to fall, okay? Again, this is a lot of information, a lot to understand. We're going to go over this over and over and over and over and over again, okay, guys? I don't use Bollinger Bands. I'm not saying they don't work. I just don't use them. They definitely help. They're kind of like a support and resistance area as well. If I type in Bollinger Band, indications, Bollinger Bands, there you go. There you go. This is a different one though. Actually, I don't like that one. That's gross. Bollinger Bands strategy. There you go. Okay, well that's not the right one I'm looking for. But anyways, it tells you, look, enter, exit, enter, exit. So I'm not saying indicators work all the time. They don't. Okay? But you can see it shows you, look, my levels are on points. My levels are crazy how good we are trading right now. Okay? Buy, sell, sell. But again, it's not going to be perfect. I don't want you guys to just look off of indicators and be like, oh my gosh, I'm going to use an indicator to make money. It's not how it works. Okay? Anyways, let me get rid of that Bollinger Band thing though. Questions, comments, concerns. Kayla, do you want to add anything? What else we got? Can you show how you activate the indication one more time? Yeah. So all you do is go to indicators, type in Bollinger or bowling, and it should be Bollinger Band strategy or Bollinger Bands here. This is Bollinger Bands. It shows support, shows resistance. Once you break, so it does help, right? It does help. But at the same time, it's not going to be a winning strategy every single time. Because now look at it. You're saying, oh, well, look, it's hitting the green. Should we buy? No. Right? It helps, though. Can you show how to act? Oh, yeah, I got you. All right. Kayla, sorry, go ahead. Do you have anything to add?
Yeah, I want to take some questions from the crowd. You guys have any questions? Anything you guys want to go over? Ask a question. Do a little Q&A. I love answering questions. We may not go over it today, but I do like answering your questions. Well, you want to take over that one? Can you please explain more price action and how to draw support and resistance lines?
Yeah. Let me give you guys a quick example right here. I'll draw support and resistance real quick, okay? All right, let's go to like a 5-minute time frame real quick. 5 minute, my bad. All right. So let me find just a very easy way to identify this. Okay, I'll use this example right here, right? When you look for support, when you look for resistance, right, you want to look for price direction to shift. Actually, it might even look better on a 4-hour time frame. Okay, it's harder on the bigger time frames. Okay, here we go. You want to look at where price shifts, right? If it's buyers or it's sellers, right? Here, Matt, look, you see big movement to one direction. Okay. Yeah, look, we'll pause quick. He says don't overtrade. Look what happened. He overtraded. Okay. Don't do that. I made 3 trades today. Anyways, back to support and resistance. Okay. When you see buyers step up, when you see big moves to the upside, big move, big move, big move, big move, right? When you see sellers in one direction to the downside, big move, big move, big move, big move, right? That can help us identify where resistance and support is. So let's start at resistance, right? Well, if I draw a line where we dropped very heavily on one side, look what happened. Price gone to this level, pulled on down. So what happens here, most likely? Since we broke this level, when a level breaks, it turns into the other level. So since this broke and now broke resistance, potentially when this price gets all the way down to 20,786, most likely we will find support here. Okay? Yes, you can trade on TradingView, but you have to connect your broker. Okay? Well, what if I draw a line right here? You can see here's an active level of support. When price comes into this level, we bounce off of it. When price comes to this level, we bounce off of it. When price comes into this level, we bounce off of it. But if I keep going over, look, this level started acting as resistance. Price came into it, got rejected. Price came into it, got rejected. And look, we finally broke. And now we're back into support. Okay, and there's multiple levels of support inside of each other. Here's support. Price comes down into it, bounces off of it. Here's resistance. Price comes up to this level, falls right back down. Okay, another level of resistance. And there's multiple levels of resistance inside of each other. Okay, like here's another level of resistance. Price comes up to this level, falls back down. Okay, go to a 15-minute time frame. You guys can see how those levels are now acting. What are these things called? We're in a range or we're in a channel. This is a range. This is a range. We trade in between ranges. Okay, when a range breaks out, we then trade into the other range, right? This was a range. Let me find a better example. We broke out of this range. Now we're in this range. We're trading in between this range, trading in between range trades. Boom, we broke out. Now we're trading in between this range. Boom, we broke down. Now we're in this range now, just chilling. Do you guys see that? Is that answering your question? Oh, Caleb, I'll let you test time and consistency when you trade. I'll let you answer that one, the time frame one.
Is there a main time frame and other confirmation? Yeah. So why do we use multiple time frames, right? We're using multiple time frames so we can gain more confirmation towards our trade. If we zoom out, you guys always have to remember there's a bigger picture going on, right? There's a reason why market is at all-time highs right now. It's not just because of the president. It's not just because of this. It's not just because of that. There's many, many, many factors as to why price changes, right? And we're trying to zoom out and figure out why that is, or at least see the overall trend of the market, right? For example, if you guys have a chart pulled up right now, most stocks and commodities and everything is going to be synonymous with each other, right? Because the overall trend of the market is going up right now, right? So if I were to click on a stock, let's just say I'm going to click on Google, it's safe to assume that Google is going up. Right now it's reaching all-time highs, at least since splits and everything, yeah. So it's reaching all-time highs. If we go on something else, let's go on, let's see, like DraftKings or something like that, right? Boom, all-time highs. We go to Bitcoin, obviously it's all the way up, new highs every single day, but we're zooming out, right? When you zoom out, you can see things a little bit differently. If you're on a plane and you look out of the window, you could see you could see the developments within a square region. You can see the area and the plane for what it really is. Not just when you're standing in the neighborhood, you're like, oh shit, it's a big ass house. You know what I mean? You're looking at things from a different perspective. And then when you start to work your way down in time frames, you're basically walking inside the neighborhood. You're like, oh wow, this is really fancy. Oh, I see what's going on a little bit more. I see why it's so expensive. So that's why we're using big time frames. So I like to work my way down, especially during the week. Say Monday comes around, we go to the weekly time frame. Then we work our way down to the daily, the 4 hour, the 1 hour, 30, 15, 5, and then the 1 minute is what we're executing off of. Just because there's a 4 hour candle going to the fucking moon, I'm not executing a trade based off of just that. I'm looking at multiple time frames. And the more that your time frames align, the easier it is to trade, right? That's why we do pre-market analysis. If you haven't already, go to the announcements tab and look at my spreadsheet that I put out for you guys. The point of using multiple time frames is this. If I see a 4 hourly candle that's bullish and it's going to the upside, all right, that's telling me, okay, within the last at least 4 hours, the market has been going up. Now, let's just say I go from a 4 hour to a 1 hour, and it seems as though the 4 hour candle was green, right? But then the last hourly candle was red. So what's that telling me? Okay, maybe we're dying down. Maybe the overall direction the last 4 hours was up, but now on a lower time frame, it looks like we're coming down. And then the same thing, we work our way down from the 1 hour to, let's just say, the 15 minute, right? And then it's like, oh, really? Okay. So within that hour, each 15-minute candle looks like it's going to the downside. So maybe we're changing trend right now. Make sense, guys? And then we're executing off a 1 minute time frame. That way we're getting the closest look possible. No reason to go to a 30-second or a 1 second time frame that doesn't exist. Okay, like it exists, but we don't do that shit here. You go to a 1 minute time frame. You're looking at real time data, and you're making a trade based off of your confluences. Okay, a confluence is basically just a confirmation saying that, okay, maybe I can add this to my list of analyses and make a decision based off of that.
Yeah, I'll explain margin. Yeah, I got you. But yeah, I hope that made sense what Kayla explained. Okay, yeah, perfect. I'll go really quick into what margin is because again, a lot of people don't understand that. So I'm gonna break that down really, really quick. I explained it a little bit yesterday, but trading base margin. All right, I'm gonna show you guys a thing real quick. Give me 2 seconds so I can pull it up for you. Here we go. Share screen. All right. All right, tell me if you guys thumbs up real quick in the chat. Can we see that screen? Looking pretty? Looking good? Real quick. Awesome. Cool. So this is Tradevate. This is the broker I use to perform all my trades, okay? This tells me the margin I need to afford one contract, okay? What does margin mean? Well, technically, NQ, one contract, costs $21,200 and something dollars, okay, for one contract. That's a lot of money. And probably every single one of you guys in this chat doesn't have $21,200 to just invest one contract in. Okay, that's fine. Right? I didn't have 21 grand when I started trading. So the broker's like, hey, I'm just going to make myself an example, and I'm going to start off with what I trade. And then we'll go to what you guys are going to trade, the baby ones. But the broker's like, hey, Will, you don't need 21 grand to afford this one contract. You only need $1,000 for this one contract. It doesn't mean, oh, I have $1,000 in my account, I can afford one contract. That's not what that means. Because if you have $1,000 in your account and you buy one contract, if this moves $1 or one tick against you, which one tick is 20.25, which is technically per point, or 1 point against you will be $20 loss, and points are move quickly. So if this goes below $1,000, so if you have $1,000 account and you're down, now your account's down $980, what's the broker going to be like? Hey, Will, you broke our margin requirement. You broke our rule. You went below the $1,000 we said you're supposed to maintain. We're going to kick you out of the position. So they're actually going to automatically knock you out of the position. And they're going to charge you a fee saying you broke it. Okay. What is initial margin? Why is that more expensive? And it's how much is this? $24,420. Well, they'll say, hey, Will, if you want to hold this contract for weeks in, years out, forever, you want to hold this forever, you need $24,420 for one contract. But if you hold it for market open till market close, you only need $1,000. Okay? So, Z, we trade live in the morning, every single morning. We finish the day. We aren't trading right now. This is a lesson. Okay? We trade at 8 a.m. to 10 a.m. Okay? So, for example, when I trade 10 contracts, I have to make sure my account doesn't go below $10,000 because 10 times 1, 10 times is 10,000, right? 10 times 1,000. Okay. So if you're trading, I need to make sure my account balance can't go below that. So for example, you guys can't afford that. That's a lot of money, right? So that's why I say, hey guys, don't worry. trade MNQ, Micro E Mini NASDAQ. Let me click on this. Okay. And you can see now tick size, instead of it moving $25 a point, it only moves $2 a point. It's a lot safer. Okay. So it's only $100 per contract. So for example, you have $1,000 in your trading account. You can technically afford one contract. So now you have $900 worth of wiggle room. The broker just says, hey, Will, you just make sure your account doesn't go below $999. If you buy 5 contracts, can somebody tell me what the margin you need in your account if you buy 5 contracts? Tell me. If you buy 5 contracts, how many you need? All right, you guys are getting it. If I buy 2 contracts, how many do I need? Okay, cool. You guys are getting it. So, whatever that value is, you got to make sure. And the biggest thing that you guys have to understand is, let's say I have $20,000 in my, actually, let's make the math easier. I'm sorry. Let's say I have $200 in my account and I buy 1 contract. Well, the broker says, hey, all you need, don't go below $100, which means technically you can lose $100 because 200 minus 100 is 100, or $101 technically. Okay. But what happens if you still don't sell your position? What happens if the thing just falls like crazy? Well, your $200 account could actually go into the negative. So now you might be negative $25 plus the fee, right? And that's why you want to make sure, 1, you have enough money in your account so you never even ever have to worry about breaking the margin rule. And 2, you have to make sure that you are extremely good at your risk management. So if you are going into a position, you have $500 in your account, you shouldn't let this bleed to $400. You should be like, hey, I'm going to one position. My max loss on this position is $20 or $30 or whatever the case may be with a $500 account. So worst case scenario, your account will go down 500 minus 30. What? Okay. 470. You guys get me? You guys feel me? Do you guys understand what margin is? Can I get a thumbs up? You guys understand? Want to add anything, Kayla, to that?
Yeah. So essentially, Will said it all perfectly. It's like, imagine this. It's like, let's just say I'm the broker, right? I got all the fucking money, and Will wants to start trading. Will's gonna ask me to borrow some money, basically, and I'm gonna say, all right, here's $10,000, right? You can trade with it, but if you lose $1,000, I'm never lending you money again. Basically, you're gonna have to ask me for another loan. That's basically what prop firms do. So you guys need to make sure that you're paper trading first. Why is this? I know everybody wants to go over strategy and what's the fucking magic secret. There's no magic secret, all right? We're going over analytics right now. Why is this so important? Because if you don't understand, if you don't have basic understanding of how evil the market can be and how evil prop firms can be and how essential it is that you're trading with money that you can afford to lose, if you don't understand that, you shouldn't be trading. Why? Because you're gonna blow through money faster than you can fucking imagine. So if I'm asking this company, let's just say a prop firm or whatever, to borrow their money, they're gonna say, here, let me give you a test. Let's see if you can manage this first. If you can manage it, I'll give you some real money. That's what a prop firm is. So the reason that you want to paper trade beforehand and you want to get good at it is that you can show the prop firm, look, I passed the challenge. Can I have some real money now? They're like, fuck yeah, here you go. Because now they're going to get paid off of that. The reason you want to practice and you want to paper trade, I'll say it again, is because if you don't, you will blow through a test account, which costs money. And they're going to be like, oh, you didn't pass the test? No problem. Here's another test, $50. Oh, you didn't pass that one? Here's another one, $50. It's just going to keep adding up, and you're going to blow all of your fucking accounts, and you're going to run through money very, very quickly. That's why it's so essential to practice, and paper trade.
Let me add on to that too.
Yeah.
Real quick. That was good, Caleb. Let me add on to that. So if you guys are confused, he's talking about prop firms compared to your own personal account. If you decide to go for prop firms, I have a tutorial in my Discord. What he's saying is, hey, the prop firm saying you have to pay an X amount of fee to trade with us, and then if you pass with us, you can trade our real money, right? And then they keep a certain cut of the profits, and then you keep the other certain cut of the profits. But the thing with prop firms is you're never going to trade your own money. You're always trading the prop firm. That's why it's called a prop firm's money to make money in trading. Okay. If you guys don't want to go that route, which you can't, it's up to you. you can, what I was saying, you can trade with your own personal capital and fund your account between $500,000, right? So there's a difference between prop firms and there's a difference between personal capital, your own broker. Okay, Caleb, go ahead. I didn't mean to cut you off.
Very good. So basically, they're giving you a little piece of a lot. Again, if you're trading with a prop firm, you're making the money as well. Whether it's a 90-10 split and you keep 90% of the profits and then the prop firm keeps 10%, either way, you're making the money because you bought the test account. In order to get their funding, you have to pass the test. So that costs money right there. Then it costs money to activate that account. And then you also have fees when you're trading, which is like that 90-10 split. And then there's also fees that your brokers charge. So again, these are important things that you need to know if you're going into the world of either prop firms or whatever. Even when you use a regular broker, if you're using Thinkorswim and you're trading shares or whatever, they're still going to charge you a cut to use that platform. It may be a little bit of money, and you're like, "Oh, I made $1,000. Who cares if it's $5 that they're taking out?" Tell you why it's important because when you have a lot of money, that $5 then turns into $5,000 in fees. That's why it's so important to understand this type of shit. So in other words, if you do well in the paper trade, they'll give you enough of their own money. Now, okay, so basically, you need to practice at first. You need to go to the park by yourself and shoot some basketballs. That's paper trading. Okay, and you go for the tryout at the team. Okay, you practice enough basketball. You made enough threes. You're good at your layups. You're good at your free throws. Now you're going to show the coach, hey, I want to be a part of the team. He goes, okay, come try out. That's the test account. Make sense? Once you pass the test, then he's like, you're good. You make the team. That's how that works. But you're not gonna watch a bunch of fucking basketball videos and watch fucking Kobe highlights and LeBron highlights and the greatest of all time. You're not gonna watch a bunch of their videos on YouTube and then go straight to the tryouts without ever shooting the fucking basketball first. That's ludicrous. It's the same thing with trading. You can scroll through somebody's Instagram top to bottom. You can watch all of our videos, no problem. If you don't apply what we're teaching you, you're gonna fuck up and you're gonna lose money so quickly. That's why it's so important to study.
Awesome. What other questions we got, guys? We have about 20ish minutes, so throw questions our way. That's what we're here for. So what else we got? What else we got? Don't be shy, guys. No bad. There's no dude, this is basic. This is literally like you understanding what margin is, what this is egg. These are basic things. Okay, but ask questions. There's no stupid question. Okay, don't be afraid to type in a question and be like, oh, it's gonna be stupid. Everybody's gonna be like, it's weird. No, don't worry, guys. Ask the question. I started from zero. Kalo started from zero. All right. Tell us more about the memberships. Yeah, I can very, very quickly go over that real quick. Okay, we go private Friday, which means everything in the Discord is going to go private. You will lose access to everything unless there's two ways to get into it, okay? The first way will be $149 a month for literally everything that you're already having, lessons, live trading, webinars, all that good stuff. We're going to do giveaways. If you want to go to the next step in the elite process, it'll be $200 a month. You get private webinars. You get boot camps 2 to 3 times a year, which means you come out wherever we are in the country and we trade together for a week, okay? And then we do bigger, and then you get more of a one-on-one or more of a more access to me and Kalo, and then at least once or twice a month you get a one personal phone call to see how you're doing. Okay, and then we have a $200 course, $300 course. I'm sorry, but if you are already going to be a member, you get 50% off. Then if you're an elite members, you get 65% off. Cool. All right, and I'll give you more update when you get closer. But that's the fast rundown of that. All right, back to the questions.
All right, I'm gonna answer this question about shorts. So basically,
yeah, go for it.
Basically, the same way that when you're buying something, you sell it later. It's just the inverse of that. What a short is that you're selling something and you're buying it back later. Even though you don't own it, your broker allows you to sell a contract on their behalf and then buy it back later at a different price. So the same thing. It's a transaction. It's a transaction. If I'm going long in the market, meaning I'm buying something, I'm buying it from somebody that is selling it. So that means somebody had to short in order for me to buy it, in order for me to have that position that I can take. So it's the same way. It's a little bit of a funky concept. That's like I don't know, if I were to like lend fucking Will a pair of shoes, and I'm like, here, sell these, and then it's like I'm fronting it. It's like I'm fronting him a pair of shoes, and I'm like, yo, sell these and give me the money after, and you can keep the difference. That's the only way that I can really give you an analogy. Make sense?
Awesome.
What's the difference between futures and options? We went over that already. There's a lot of different factors. It's just a different style of trading. You got to do whatever you're comfortable with. We trade futures over here. We've done options too, but this is for futures. But the same things apply to options. You can do whatever you like. You can do options, shares. All of this information applies across the entire board of trading.
Yes, Kyle. It does cost some money too. If you have a TradeAvate account, I think it's $10 extra a month to connect your TradeAvate account to TradingView. You do that in TradeAvate, the add-on link. Okay. How does leverage work in futures trading, and what are the risks involved? Hey, we literally just went over that with the margin trading. Were you part of that? Did you see what we're talking about? Thank you guys, been super helpful. Perfect. Just been clear. Don't join at any level. By Friday, there will be no accessible information like there is now in Discord. Correct. On Friday, everything goes away. There will be a free section, but what we're offering right now, everything, live trading, classes, webinars, information, access to us, giveaways, boot camps, that's all going away on Friday unless you want to become a member. Okay. You can give a visual walkthrough of how to buy or sell futures. Kayla, do you want to answer that?
We'll go over that another time. That's like a whole walkthrough.
Yeah, on TradingView, please. Yeah, I'll make a tutorial video on that. I should have already a tutorial. Go to the tutorial videos too. I have 3 of them. I'll be putting a lot more in there. And guys, if you haven't already subscribed to my YouTube page, there's gonna be a ton of content that's about to be released in the next handful of days. A ton. Okay, a lot of free information.
Yeah, all 40 of you in here, you guys gotta understand. Will and I have worked a lot on this Discord, and Will has recorded many videos. Go to his YouTube channel, watch all of his videos. Go to the tutorials page, watch the tutorials. Most of your questions will be answered by the content that he has given you. All right. The YouTube costs nothing. Go to his YouTube, watch the fucking videos, pay attention, bust out a notebook, pull up the notes app on your phone, take notes. It's very important that you guys study.
It says technically, bro, the screenshot you showed, it says $21,209. It's showing you how much that value of the contract costs. It does cost $21,200, but for your broker, they're saying when you purchase it in, because the guys, you have to have a broker to trade. They say, hey, you don't need 21,000x. You just need what the margin requirements are, and I shared that with you guys. Okay. We got about 10-ish more minutes or so because I have to hop on some meetings. What are the questions we got? Again, we're trading live tomorrow too. Tomorrow's Thursday. Every single day we trade live, and then tomorrow will be the last free day on Friday. So we do close Friday at 11 a.m. Okay. So then you have to go to yeah. I mean, you need a broker, just like if you yeah, Kyle, you should know that, bro. You have a broker. What's the YouTube channel? It's in. If you go down to in my page and it says YouTube, in the members lounge, it's right there. No, yeah, but I thought you can exercise on TradingView. Yes, only you can execute. You hear you just said that you can execute on TradingView, but you still need a broker to connect to make those trades. But you can execute on TradingView. Okay.
I want to hear from some people. Jetstar, Lorenzo, Mokarmi, Kyle. Did you guys trade today? Chulo, how you doing? Some new faces. We got fucking balls and fucking nutsack. What's up, guys?
Bro, you're killing me, dude.
Fucking balls and nutsack. Absolutely incredible. Max, how are you doing? Fucking humper dumper. What the fuck is wrong with you guys?
You guys are names, oh my gosh.
Mara, Brown, you guys are hilarious. Jay, what's up? Jay Mills, glad to have you here. Gotta run. See you manana. Peace.
Yo, guys, real quick. Caleb, give a second. Real quick, guys, I'm going to have a lot of free education on my YouTube, but if you want more in-depth, step-by-step to how to get started, since you guys are a part now, you get 50% off on the course. Okay? Just DM me access. I got you. It literally is A to Z on how to get started on trading. But again, there's going to be a lot of free content if you don't want to purchase anything in my YouTube. Okay? Be gone. What else we got? Any other questions? Beautiful. Yeah, Sam, I know you're taking the course. I hope you like it. If you want other people to know that, just let me know. Hope you're liking it so far. Swally, I put a video in the tutorials tab. It's in the tutorials tab. But you just open up a TradingView account and then you can paper trade from there. Go to tradeovate.com on Google, make an account, and then you can paper trade. Of course, backs. We got you guys. We're gonna kill it tomorrow morning, Thursday. We're killing it.
Who wants to go over some psychology really quickly?
Yeah, we got about 17 minutes, so we can go over psychology real quickly. So, Kayla, I'll let you talk about that.
www. Okay. All right. All right, let me tell you something. Psychology is the most important thing that you're gonna have to really hone in on. If you have no fucking skills when it comes to trading, those skills are all acquired. Okay, I didn't come into this game knowing exactly what I was doing. In fact, nobody did. Everybody had to learn. You have to start somewhere. This is where you want to start. Exactly where you are right now. Getting educated. The first thing that you need is a mentor, which is me and Will. Okay, you can't do this shit without any education. Okay, you don't go to school without a fucking teacher. Your teachers might suck. Okay, I've had some really shitty teachers, right? And I've had some really shitty mentors in the trading space. I had to take my time and learn from people. I had to learn from a lot of people, and I had to learn from one specific person. And at the end of the day, the person that taught me the most was me. But I had to study myself. You have to study yourself as a trader. Again, you could be fucking Sam or Jessica or Miranda or Max or whoever the fuck. It doesn't matter. When you come into the trading space, you are a completely different person. Your reaction